We can see how we are wedged right in here. We see between December 22nd and today, we have been in a trading range between 3,800 to 3,900 on the S&P. That range gives us a 50% line of 3,853, which is why we are seeing it consolidate in this area. During this time, we've established an upper channel line and a lower channel line, actually pinching us. When we zoom out, we can actually see the pendant zooming in on a 10-minute time frame, and we can see how we are respecting the downward channel line to the point where we're actually unable to close below it. Every single close just has a reversal. Why is this important? It's important because there's only been 2 other times we have done this in 2022. You can see in the rectangular boxes the levels of consolidation. You can see how they are leading to downward breaks. Currently, we are below the 20, 50, and 100-day moving average, and they are wrapping down. Now, this is fascinating because it didn't happen in May. It did happen in February, but it happened again on this little period right in here where we had less consolidation before breaking down. So we're watching this very closely, and the reason for that is one of 2 things is going to happen. Either this bear pendant is going to execute with a break to the downside, or for some reason, we're going to break to the upside. And if we can get through all this, that's going to lead to a very large push. And I think that's one of the reasons why we're seeing so much consolidation, because we're seeing a battle going on. And we're getting some mixed signals. For example, copper stocks are rallying and copper futures have been strong. Copper futures are only strong usually when you're in an environment where you're going to have inflation moving higher. So this is a concern, but obviously people are benefiting from it. SCCO, this looks absolutely incredible. FCX, another one, just absolutely incredible the way that these are setting up these little patterns. Energy has this bear flag, but it will not break it. Instead, we're just sitting in here consolidating. Now, we are having trouble with that 50-day moving average right here, but overall, we're still in this consolidation phase and we're holding previous support. Tomorrow we have non-farm payrolls. Today we had ADP, non-farm payrolls, which actually gives you an indication on what tomorrow should be like. And it looks like it's actually going to come in stronger. As they've raised rates historically, this should be plummeting. And it's not. A matter of fact, you're really still at the same level that you were back in April. So we're not really seeing this drop, and I think that's adding to the inflation fears. As we went over in Saturday's video, and I'm going to link that again at the end and strongly suggest that you watch it because those trends are working very, very well. I went over 4 trends, 3 are firing on all cylinders right now. So if you take a look at the top tech names and how they're walking us down here, it's kind of like a frog in boiling water. In other words, we seem like we're bouncing around, but these arrows denote the opens. So every open on Apple, for example, is a lower high. They seem to be going through them line by line. Today we saw software get absolutely destroyed. Microsoft, Crowd, Snow. Anything with a high price to sales multiple, which is basically software, it just got taken to the woodshed today and is completely underperforming. Not every sector is underperforming. As we went through on Saturday, the fastest growing GDP is going to have the best earnings this year. They're going to get the dollars. That's China. We can see the 1045, 104.85 level and how we're trying to push through. We can see how we are above the 55 and the 200 is actually starting to point up. And BABA actually is in a position now where Ant Financial, they've been given the go-ahead to go public with that and start the IPO process. By tapping into that, they're going to unlock a lot of value with this corporation. And we've had a base for a very long period of time. We're finally getting above that 200-day moving average. Today in the Alpha Chasers community, took a position on a very simple trade, just a 5-minute orb, opening range breakout. Here's your range, breaks above it. We were going for the gap fill minimally off the open, just to gap fill because we've been doing that a lot. And then just kind of kept on going. So we just kept using a trailing stop and trimming into it. And then we used this particular pattern right here. We have a gravestone and you're locked in as you're drop dead into the end of the day. So worst case, if you weren't scaling out into this, at least you're out here. The question is, what do you do now with it? I would have this on my radar and I'd be watching this very, very closely. I think these names are going to be the names that are going to drive forward in 2023. not just today, but I think these are going to be the names that we're going to cycle through. It's very possible that China continues to go up and other sectors go up. Tech gets completely wrecked. This is exactly what happened in 2002. And I go over it again in that video. And I bring it up because I would watch that, because you're seeing the trends. The trends are not only my trends, but they're the trends that I've gotten from the investment banks and put together and created an actual plan. But if you look at names like this, Boeing, this is one that we put in the newsletter. Link in description to get the newsletter. And you can see right here, 197, that was our technical buy point. And we waited a little bit to make sure that it was going to get over there. There was actually a beautiful entry, and I just passed on it right here, where we kept touching that opening price. Recommend that you start looking at your opening prices and putting little levels on there and seeing how your stocks are reacting to them. And you can see right here, even the little flip, the doji flip, never broke the low on either one of them. I just didn't like the price action on January 3rd, but I got my move and we're doing quite well with it. I don't need to be first, I need to be right. So you can see that level. Now we're coming in the first resistance already at 207, up $10 on a stock. Not many names right now are up $10. So I would strongly suggest you look at the industrials as well. Another sector that is just knocking the cover off the ball are home builders. When you go through recessionary times, people buy homes and stay in their homes. Quick tip, we have not had this low of inventory being created since 1960. That's how low the creation of inventory is for new homes right now. So we're setting this up, we're breaking down, then you flip again, and you're just forming these mini DTLs right at support and resistance lines, and you're just setting up to grind. Also, start running scans on golden crosses. You'll see them everywhere right now. Avoid the ones that are dropping. Stop trying to catch that falling knife, right? We all have done it. I did it when I started early as well. There will be a time when Microsoft and Apple and Tesla and they all outperform. That is not now. This is value divided by growth on a monthly chart. You can see the W and you can see how value is just absolutely crushing in performance to growth. Historically, this is what happens in GDP contraction or recessionary time. I got a lot of comments on Tesla and levels for Tesla. I don't really see anything massively trade-wise in here, but I just wanted to point the levels on here. You can just screenshot it for yourself, and you can see the levels where we're at and how we are responding to those levels. Join the Alpha Traders community. There is a link up here in the top right. Simply click the link. Reminder, tomorrow at 8:30, they're going to have non-farm payrolls. It will move the market. Have a great night, everybody.